Hello guys, in this video we are going to see about module B unit 6 definition, scope and accounting standard. If anyone not yet subscribed our channel, kindly subscribe, bookmark. Accounting is often called as language of business. In general, the purpose of language is to communicate something to anyone. In same way, accounting is called language of business. The purpose of accounting is to communicate the business operation and the financial health of the organization. Here they given the definition of accounting. Accounting is an art of recording, classifying and summarizing in terms of money and interpreting the result thereof. The detailed explanation of definition is explained here. While seeing this, you will be very clear about this one. Many people think that bookkeeping and accountancy are same, but actually they are different. Bookkeeping is part of an accounting. Okay, bookkeeping is a part of an accounting. Okay, what is bookkeeping? What actually it is means, bookkeeping means recording the business transaction in the book, which is known as ledger. For example, if you are going to purchase something or you are going to sell something, purchase of goods 1000 rupees, you will enter in a book. Again, sale of goods for a worth of 500. Like that, you are maintaining the transaction, which is known as bookkeeping. In another hand, accountancy is to describe the business position, to describe about the business position. Okay, financial statement. What is financial statement? Financial statement are balance sheet, profit and loss account. Okay, the objective of financial statement is to provide information. Okay, is to provide information about financial position, performance and changes in financial position of an enterprise. Okay, to provide the information, to whom they are going to provide the information? First, government authority. Okay, government authority like income tax department and sale tax department. On other hand, they will provide an information to shareholder, investor and business associates. Why they need to provide an information to shareholder and investors? Because based on this financial statement only, they may understand, they may able to know that it is worth to invest or not. It will be very useful for them to take the investment decision. So financial statement, objective of financial statement is to provide the information about financial position to government authorities and shareholder and then investor. Any language has a set of rules called grammar. Since accountancy is also a language of business, it also has a set of rules which is known as accounting standards. This accounting standard will be explained later in this unit. These are the accounting standards. Okay. Nature and purpose of accounting. Okay, any business have to keep a systematic record of the day-to-day event in an orderly manner. For example, if you are going to purchase a goods of worth 10,000, goods purchased 10,000. Again, you are going to sell in goods for worth of 5,000. Your goods purchased for 10,000 and then now you are going to sell the goods for the worth of 5,000. Again, you are going to purchase in goods of worth 2,000. So this is what they are trying to say is systematic record of day-to-day event in an orderly manner. Okay, this is called bookkeeping. Okay, what is bookkeeping? Recording the business transaction in a book of original entry in ledger. So this is called bookkeeping. First we are recording. Accounting is an art of recording, so we recorded. Next we need to classify. How we are going to classify? Here one is purchase and another one is sale. So in purchase account we write 10,000 and 2,000. In sale account you will write 5,000. First we recorded day-to-day event and then we classified. Then we will summarize. We will summarize the data. From that summarization we will find trial balance. Okay, first we are recording and then classifying and then summarizing the record. We will prepare a trial balance from the ledger. From trial balance we will find out balance sheet and profit and loss account. Then this balance sheet and profit and loss account nothing but financial statement. From this financial statement we will interpret the financial transaction. We will analyze the data. Okay, next we are going to see about the future of accounting. This para describes about this definition very clearly. Okay, first what they mentioned, accounting is an art of recording, classifying and summarizing. Okay, then we will summarize the data. We will find the trial balance. From trial balance we will find out profit and loss account and then balance sheet. Okay, next in a significant manner. Okay, and then in terms of money. Okay, in terms of money, accounting records the transaction in terms of money. For example, there is some argument between the management and worker of a company. So the worker decided to make a strike on a particular day. This will not be recorded in the accounting book of account. We will not record that strike has been occurred in this day, even though because of that strike there is a loss. Production has been stopped, there is a loss. Even though there is a loss, the transaction does not involve any money, so it will not record in book of account. Accounting records the transaction in terms of money. Only if money involves only, that accounting will take in record, otherwise it will ignore. Even though there is an argument between management and worker, there is a loss of money, but we can't able to write in book of account because money not involved in the transaction. Okay, next, and the event which are in the part at least a financial character. And next one, accounting records only the transaction of a financial character. If you are buying a computer of worth 1 lakh, just in an accounting book you will write we purchase a computer of a worth of 1 lakh only. We will not mention any other specification. We will not mention computer specification, what the RAM is, what the ROM, what the chip they involved, what the processor they are using. We will not mention anything. We will just write computer purchase for a worth of 1 lakh. So only financial character involved. Apart from that, it will not record anything. Financial character means money. Only financial character will be recorded. And the last one, interpreting the result thereof. Interpreting the result. Okay. Finally, we find out the financial statement, which is profit and loss account and then balance sheet. Okay. After that, you are going for a bank with your balance sheet and asking for the loan. You are asking a loan in the bank. The bank will check the financial statement of your balance sheet and profit and loss account, whether we can able to give a credit loan, we can able to give a loan to this company or not. it will be very useful in taking the credit decision. So this is called the interpreting the financial data. They are analyzing your balance sheet and profit and loss. They are analyzing your data to provide the loan. So this definition is very important. So far we discussed everything about this definition only. Accounting is an art of recording, classifying and summarizing in a significant manner, and in terms of money, only money. If money involves only, we will record transaction and event which are in a part at least of financial character. Even though money involved also, we will mention that particular, that financial character only we will mention, and interpreting the result thereof. Next we are going to see about purpose and objective of accounting in detailed manner. First one, systematic record. We need to maintain an systematic record. And second one, result of the operation, whether the business earning profit or loss, it should be mentioned so that we can able to create an profit and loss account, profit and loss statement. And third one, financial position of the business. We need to know about the financial strength of the any business. And fourth one, it will be helpful in making a rational decision making. Suppose we need to manufacture a pot, we have a two option, either we can able to manufacture in our factory or purchase from outside. Then what can be the reasonable selling price for the product or the service we are giving? Then what can be the maximum discount offered to the special customer? For these questions, it will be very helpful in making a decision making. And next one, it should satisfy the law. Any entity such as company, society, public, which need to maintain in accounting as per the law. Some of the laws are Companies Act, Society Act, Public Trust Act, Sales Tax, Income Tax, etc. Next we are going to see about history of accounting, how accounting evolved. From exam point of view, it has very less importance, but there may be a possibilities of asking some 0.5 marks. First one, stewardship accounting. In earlier times, wealthy people will employ a person named called as stewards to manage their properties. Their work is to manage their properties. What are the expense they are making? What are the profit? And they will maintain a separate book, which is known as bookkeeping. They will record everything in an orderly manner, which is known as bookkeeping. So this bookkeeping is a base of accounting that we are using. So for example, you are giving 10,000 rupees to Guru. Okay, you are giving 10,000 rupees to Guru. In your account, you will write 10,000 given to Guru, debit. You are given to Guru. This is known as single entry bookkeeping or bookkeeping. But later they began to follow double entry bookkeeping. After bookkeeping, they began to follow the double entry bookkeeping. Double entry bookkeeping means in your account you written as 10,000 given to Guru, debit. Again in Guru's account, this is Guru account, you write 10,000 credit by, say this is Ravi account, by Ravi. If only you are writing in an one person point of view, then that is called single entry bookkeeping. If it is written in Ravi point of view and Guru's point of view, it is known as double entry bookkeeping. Every entry has an opposite entry. If debit means it will be credit. For example, if a customer has an passbook print, is printing his passbook, If you are, if that customer checking that passbook entries mean, it is known as single entry bookkeeping. That entries make him to understand what the credit and debit has been done by the person. This is an example of single entry bookkeeping. For double entry bookkeeping, for example, if a customer depositing 10,000 in his account, for example, a customer depositing 10,000 in his account, 10,000 will be credited to his account. That corresponding entry 10,000 will be debited in cash on hand. Okay, you are crediting customer's account, then correspondingly our cash on hand will be debited. Okay, this is an example of double entry bookkeeping. Next, financial accounting. So in previously that financial statement and profit and loss statement is not disclosed to public, but later the development of large scale business and joint stock companies, public began to invest in those companies. So so in this case that public also need to know about the financial position of the company. So the financial accounting provides an legal form to doctrine of stewardship which requires information disclosed to shareholder in the form of annual income statement and balance sheet. Previously, that financial statement is not known to the general public. After development of these things, now it is disclosed to shareholder in form of annual income and balance sheet. Next, cost accounting. That cost accounting is concerned only with an application of costing principle. They need to control that production cost, that their expenses, and they need to increase the profitability and the efficiency of the enterprise. So cost accounting means the main objective is to increase the profit of the entity, to gain the more profit. Next one, management accounting. So in management accounting, generally accounting means we are recording everything. Okay, that records are provided to the management. The management by looking that records, they may able to decide what the policy can be implemented so that company may have a profit. They are having some report what daily is going on, so they will have some idea. They will decide if any policy is changed in our company, is there is a possibilities of increase in profit. So this will be very useful for the management to formulation of policy and decision making. Managers are supplied with information. So thus accounting, in generally accounting is recording and analyzing financial transaction. This is shifted to using the information for the decision affecting the future. Apart from recording and analyzing, that data can be very useful for the management to make policies in order to gain the profit. Next one, social responsible accounting. It's nothing but which ensures that every entity should be social responsible. That's it. And then human resource accounting. In earlier days, that that employees are not considered as capital. Later, they understand that employee also an capital of the company, because that knowledgeable, trained and loyal and committed employees will earn for the company. Earning will be more. So employee also considered as capital. How they are evaluating, how they are calculating the value of the employees or human resource. It's based on two things. one is cost or economic value. Cost means, for example, if a company having an 100 employee, what is the salary for 100 employee? It is known as cost. For that employee, how much you are paying as a salary. The one is cost, and second one is economic value of human resource. So that 100 employee, how much revenue generating for the company. So there are two methods. One is how much we are going to pay, and one more thing is how much they are generating revenue for the company. So this provides an valuable information to the top management to take a decision whether adequate human resources is there. If there is surplus employee, they will fire some person. If they are inadequate, it will be a problem for the company to run efficiently, so they may hire some persons. Next one, inflation accounting. So generally rising prices during inflation. So in inflation accounting, we need to ignore the inflation rises to find out the overall profit. So this is not important for exam point of view. So any company should follow the financial statement. If any company is not following the financial statement, then those companies should disclose the following things. First one, deviation from the accounting standard. What the deviation that the company made, and second one, reason for the deviation. For what reason it has been deviated, and third one, that what are the effect occurred due to the deviation. These are the accounting standards. It's very important. So they given a brief explanation. This much pages, but it's not possible to read everything in these pages. For exam point of view, you need to read only this tabulation. It's more than enough. In exam they will ask accounting standard 28, impairment of asset, that's all. So this tabulation is very important. Just to read this tabulation for exam point of view. What companies are going to follow the accounting standard? First one, enterprises which are listed in the recognized stock exchange, and then the business which annual turnover exceeds 50 crores. So this is an accounting standard. And this is Indian accounting standard. Just you read this tabulation and this tabulation, it's more than enough. No need to read this every pages. Thank you for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark.